Hi everyone, this is Christy Gray and this is my dad Steve Gray. He works for Wells Fargo and he is a loan officer. He's been in the mortgage industry for almost 30 years and this is video 7 of our interview with a mortgage agent series. It's the last one for this series, although if we think of more videos we want to create, then there will be more. And I think it goes without saying, but if you are in need of a lender or want to talk to one to figure out what your financing might be, or just general finance questions about getting approved for buying a property, let me know. I can put you in contact with him. I know where he lives. In this last video, he's going to talk about a few different types of financing that are available, and specifically some that are helpful to first-time homebuyers.
Hi everybody. With financing types, there's basically 3 different options that you have. There are conforming loans, which in San Diego go up to $546,000. Then there are non-conforming loans, which are jumbo loans, which go over $546,000. And the third type of mortgage is the government financing, which will fall under 2 main categories for FHA and VA financing. So let's talk about the government financing first, because for most first-time homebuyers, that's usually the financing of choice. VA financing handles veterans. So if you're active duty military or if you're a veteran honorably discharged, VA financing is a wonderful benefit that the government provides for you. It allows you to purchase property with no down payment and is very flexible on the underwriting criteria. So if you have some credit blemishes or job instability or things of that nature, the VA loan is going to be very flexible and very forgiving in that regard. For the rest of us, we look at FHA financing, which is available for anybody. Doesn't have to be a first-time home buyer. It allows financing for a property with as little as 3.5% for a down payment. The down payment can be gifted, so you don't have to come in with any of your own money necessarily. It's going to be forgiving as far as your job situation and your debt-to-income ratio and source of down payment. So it's a very flexible program. Allows people to finance when conventional financing might say no. The government is motivated to turn renters into homeowners. A big base of homeowners lends to stability in the neighborhood, builds the tax base. It's good for the community, it's good for the country, it's good for individuals to help them build their net worth. The next option is going to be conventional financing, which is going to typically require at least a 5% down payment and be fairly structured in what's available and what's not available. It's generally cheaper than the government financing, the FHA or the VA, but can be tougher to qualify for as far as the down payment source and your debt-to-income ratio and your credit score and things of that nature. So when we look at what program to go with, if you qualify for conventional financing, that's usually the first step. We'll go that direction. If you don't, then we move to the government financing, which gives us the most favorable chance of being approved. Thank you.